Most traders are walking into this week believing the pound has found a floor. They see a little green candle on Friday, a headline that sterling recovers, and they think the trend is changing. That is exactly the trap. Cable closed the week at 1.3203, but the weekly, the daily, the 4-hour, the 1-hour, every single time frame I track, is screaming strong sell. That means Monday's opening bids aren't conviction. They are liquidity pool being built for the next leg down. This week has one danger zone and one 3 to 5 day opportunity, and I'll show you both right now. Stay to the end. I'm giving you 2 Monday scalps and 1 swing trade that can run the next 3 to 5 days, with exact entries, stops, and the level that makes this entire analysis invalid. Here's your instant weekly verdict for cable. The structural bias for the next 3 to 5 trading days is bearish, with the expectation of a relief rally early in the week that gets sold, setting up an acceleration move towards the high-volume support cluster near 1.2985. We are not in a ranging market. We are in a trending fade, where counter-trend pops are gifts to re-enter short. The single invalidation level that flips this entire weekly bias and says, stop, rethink, the monthly structure is resetting, is a daily close above 1.3587. That's resistance level 2 on the weekly chart, and it sits well above all our major moving averages. If we close above that, I'll be the first to tell you the bearish structure is broken. Until then, every rally is suspect. Write that number down. 1.3587. If that level breaks this week, the whole monthly trend resets. But here's what you need to feel right now. The herd is positioned heavily short already, and the weekend piece about the dollar rally losing steam is making some traders think about bottom picking. That sets up a perfect early week liquidity run. We will likely see stops taken out above Friday's high, a brief squeeze that pulls in late longs, and then the real selling begins. That sequence is exactly what our Monday scalps are designed to exploit. Let's walk the charts from the top down, because this is where the macro pulse of the currency actually lives. Pull up your weekly pound sterling to US dollar. Price is sitting at 1.3203, well below the weekly pivot of 1.3286. The weekly moving averages tell a brutal story. The 20-week moving average is at 1.3298, the 50-week is 1.3372, and the 200-week is at 1.3371. Notice what's happening. Price is trading below every major weekly average, and those averages are now starting to roll over. The 20 is sloping down, the 50 is flatlining and beginning to tip, and that 200-week is acting as a ceiling. That is a textbook bearish alignment. On top of that, weekly MACD is deep in negative territory, reading minus 70 pips equivalent, with both signal lines diverging lower. There is no bullish divergence on the weekly. None. That means the trend's muscle memory is to the downside, now drop to the daily chart. The daily trend is also a strong sell. Price is below the daily 20 MA at 1.3298, same as the weekly 20, reinforcing the level, and below the 60 MA, the 200 MA. RSI is at 36.8, not yet oversold, which tells us there's still room to fall before we even think about a mean reversion bounce that matters. The ADX is at 22.22, confirming a trending environment, not a choppy one. This is a market that can run. Daily MACD is negative, with a slight flattening that might suggest the sell momentum is pausing, but there is no cross, no buy signal. That flattening actually often resolves into the next leg down, especially when the weekly is this heavy. Now here's what most traders will miss until Wednesday. The hidden divergence is not on price and MACD, it's between the pound and the dollar index's positioning. Institutional flows, which I track through the commitment of traders and prime brokerage data, show that speculative longs on the dollar have been trimmed slightly, giving the illusion of a dollar top. But the underlying real money flow, pension rebalancing, corporate hedging, is still structurally long dollars into Q3. BofA came out over the weekend explicitly telling clients to stay long USD into the third quarter. That's the kind of flow that doesn't reverse in one session. It means any pound rally this week will be shallow and will face a wall of sellers. Bring it down to the 4-hour and the 1-hour for the scalping terrain. On 4-hour, the trend is still sell. The 60-period MA is sloping down at 1.3270. And the 200-period is at 1.3350. Price attempted to reclaim the 60 MA on Friday and failed, closing back below it. That level, 1.3270, is now your first real ceiling for Monday. On the 1 hour, we are in a strong sell, but stochastics are coming out of oversold, and Williams percent R is at -81, suggesting a minor bounce is due. This is exactly the kind of setup where a scalp short at resistance works beautifully. Our weekly support and resistance levels are crystal clear. Support 1 is 1.3109. That's the immediate floor. Support 2, the big one, is 1.2985. Support 3 is all the way down at 1.2808, which becomes a target only if we get an external shock. Resistance 1 is 1.3410. Resistance 2 at 1.3587. The weekly pivot at 1.3286 is the line in the sand for the early part of the week. If we accept below that pivot, the bears are in full control. If we push above it, we are likely to see a squeeze towards resistance 1 before the dump. So what's the path for the next 5 days? I expect an early week stab at the 1.3286 to 1.3310 zone, a rejection, and then a grind down to first test 1.3109, possibly midweek. If that support breaks, the door opens to 1.2985 by Friday. That's the rhythm I'm trading. Now let's connect the weekend narrative web to this price path, because fundamentals are the fuel that turns technicals into momentum. The weekend brought 2 critical inputs. First, BofA's note saying investors should stay long the dollar into Q3. That's not a retail tweet. That's a major institutional stance that filters into real money flows. Second, the analyst community is talking about a double squeeze on cable. Warsh's Fed keeping rates higher for longer while UK political uncertainty chips away at the pound confidence. Think fiscal wobbles, leadership questions, the kind of UK-specific risk that makes sterling underperform even when the dollar is steady. This week's calendar isn't loaded with Tier 1 UK data until possibly late week, but the risk events are skewed heavily dollar positive. The dollar leg can strengthen on any hawkish Fed rhetoric, and with Warsh at the helm, every speech is a potential volatility event. The real fuse for this week is actually the positioning adjustment ahead of month-end and quarter-end, which is happening right now. That means there's a flow-driven demand for dollars as hedges roll, and it tends to create exaggerated moves in cable. The highest impact day for cable could be Wednesday, when the liquidity from the Asian session typically dries up and the dollar often gets a bid during the European fix. That's when I expect the first serious test of 1.3109 MY 1 to 2 week directional lean is heavily bearish, targeting that 1.2985 magnet. The event that invalidates this entirely is not just a price level, but a combination. A daily close above 1.3410 coupled with a UK fiscal surprise or a clear dovish pivot from the Federation. I don't see either on the table. So I'm selling rallies. Here's your second interaction. Trigger right now. Do you think the dollar closes above 105 this Friday? Comment yes or no. I'm tracking the consensus because the DXY's 105 level correlates almost perfectly with cable hitting 1.2985. Let me see what this community believes. Now we get to the part where plans become profit. Most people skip the planning phase. They see a red chart and just hit sell. That's exactly where this week's money is made, by having the exact trigger, stop, and target before the market opens. I'm going to give you 2 Monday scalping setups and 1 3 to 5 day swing, all with institutional precision. This is the stuff I use in my own book, but before we get into them, a quick risk pulse because it's non-negotiable. Never risk more than 1 to 2% per trade. Holding through high-impact event days, especially if we have Fed speak this week, requires tighter sizing. Stops are non-negotiable, especially on the swing. That's how you survive to trade the next big weekly move. Strategy 1, the Monday opening scalp. Scalping, high probability. This is the fast snipe designed for the first 1 to 3 hours of Monday session. The condition is a retest and rejection of the 1.3290 level. Why 1.3290? That's just above the weekly pivot of 1.3286 and right at the 5-minute descending trendline from Friday's high, and it kisses the 20-period MA on the hourly. If price rallies into that zone in the London Open and prints a bearish 5-minute engulfing candle or a clear rejection wick with a close below 1.3280, you sell. Entry is at 1.3285, giving you a tiny fill buffer. Stop loss goes at 1.3310, just above the figure and Friday's high. That's a 25 pip stop. Take profit one is set at 1.3250, a quick 35 pip scalp, giving you better than a 1 minute and 1.4 seconds reward to risk on a high probability setup. If momentum is strong, you can take partial at 1.3235 as a runner. What instantly voids this Monday scalp? If the 5-minute candle closes above 1.3310 before you're triggered, do not chase. The structure has shifted, and the trap may be setting for a squeeze higher. Walk away and wait for the liquidity grab setup. The Monday opening SCALP entry, 1.3285, 5M bearish rejection at 1.3290, stop loss, 1.3310 take profit 1, 1.3250 risk, reward, 1:1.4 R invalidation, void if 5M candle closes above 1.3310, strategy 2, the Monday liquidity grab. Scalping, counter noise. This one is for the hunters. The Asian session is likely to engineer a false breakdown below 1.3109, the weekly support one. It's a classic Monday stop run. The herd stops sit just under that level, and the algos know it. We wait for a spike below, ideally down to the 1.3080 area, a sharp wick, and then an immediate reclaim of 1.3100 with a 15-minute candle close back above 1.3109. Entry is on the close above at 1.3115. Stop loss is tight, placed just below the wick at 1.3075, a 40 pip risk, which is wider but necessary for a countertrend scalp. However, the target is the nearest liquidity pool, which is the Friday closing level and minor resistance at 1.3165. That's a 50 pip gain, giving you a 1 minute and 1.25 seconds ratio. In practice, these liquidity grabs often overshoot, so I keep a runner for 1.3200. This scalp requires aggressive execution and no hesitation. If the 1H candle reclaim fails and we print another 1H close below 1.3075, you exit immediately. This trade relies on the fact that the weekend's pound recovers narrative has left a few weak hands long, and the grab will flush them before the real direction resumes. The Monday liquidity GBP entry, 1.3115, 15M reclaim above 1.3109 after wick to 1.3080, stop loss, 1.3075 take profit 1, 1.3165 risk, reward, 1:1.25 R invalidation, void if 1H candle closes below 1.3075. Now I want to hear from you. Are you scalping Monday or swinging the week? Comment scalp or swing. Let's see who's built for this market. The scalp-only traders are going to eat early, but the swing traders will carry the real meat into Friday. Strategy 3, the 3 to 5 day swing. This is the trade that aligns with the weekly and daily strong sell structure. The goal is to capture the core move of the week, a push down into the 1.2985 support, over the next 3 to 5 sessions. We are not chasing the breakdown. We are waiting for a retracement that reloads the short. The trigger condition is a rally into the 1.3340 to 1.3360 zone. Why there? That's the daily 60-period moving average, the 200-period MA cluster on the 4-hour, and a perfect 50% retracement of the last weekly down leg. It's an area where the market will trap breakout buyers and then resume the trend. Entry is set at 1.3350 on a daily close above. Wait, no. Entry is on a daily bearish rejection at that zone. Specifically, when price reaches 1.3340, we look for a daily candle close back below 1.3320, or an intraday pattern on the 4-hour that shows a bearish engulfing. I set my entry at 1.3335 to account for a slight fill. The stop loss is placed above the weekly structural level, at 1.3410, which is weekly resistance 1. That's a 75 pip stop, giving the trade room to breathe above the noise. Take profit 1 is at 1.3109, the weekly support 1, for a 226 pip gain, a risk reward of 1 minute and 3 seconds. That target can realistically be hit by Wednesday or Thursday. Take profit 2, the stretch target, is at 1.2985, adding another 124 pips from TP1. If you hold the full swing, that's 350 pips for a 1 minute and 4.6 seconds risk reward trailing stop rule. Once price trades through 1.3150, move the stop to break even at 1.3335. Once TP1 is reached, adjust the stop on the remaining position to 1.3190 to lock in a healthy gain while aiming for 1.2985. The explicit invalidation level that would negate the entire weekly swing outlook is a daily close above 1.3410. If that happens, the bearish structure is broken, and we exit immediately. No second guessing a 3 to 5 day SWNG entry, 1.3335, daily bearish rejection near 1.3340 to 60, stop loss, 1.3410 take profit 1, 1.3109 take profit 2, 1.2985 risk, reward, 1:3.0R to 1:4.6R invalidation, void if daily close above 1.3410. Never risk more than 1 to 2% per trade. Holding through high-impact event days, like a potential Fed surprise or UK political headline, requires tighter sizing. Stops are non-negotiable, especially on the swing. This is how you survive to trade the next big weekly move. So here is your single most critical level to watch for the entire week. 1.2985. It's not just support, it's the vacuum that this weekly structure is pulling towards. If we hit that level and bounce, we might see a technical recovery. But if that level breaks on Friday, the whole monthly trend flips to a full-on freefall towards 1.2808, and that's a multi-month low. I will have the updated blueprint for you this Sunday, with the fresh weekly levels and the new swing. Now, if you want last week's recap to see how we navigated the initial breakdown that set up this exact bearish sequence, that video is live right now. Tap the end screen. Then hit the bell so Sunday's next week ahead alert lands before the market opens. The algorithm rewards that bell press, and it ensures you never miss the levels that define your week. Hold the like button and subscribe. Every signal helps bring you the institutional analysis that actually moves your account.